Hi, I'm poor. And in this channel, I'm going to go through the process of kind of outlining how I'm building wealth at this stage of my life, now that I'm in my mid 40s. So let's get into this. There's a lot of different directions we could go in this first video that I'm making on this channel, but I thought I would start off by just outlining, what I have and how I'm beginning to kind of diversify my funds in order to make the most of it. I think the thing that's going to be unique about this channel is I am not an expert. I would say that nothing I'm doing you should necessarily copy, but the one thing that I am good at is when I'm learning something, being able to put it into words and express it so that others who are on the same kind of learning path can learn along with me. So that's where I think the value of this channel is going to be. I'm a beginner in the process of really becoming financial literate in a lot of things, but that process of learning financial literacy from the ground up, I think is something that isn't documented well in a lot of YouTube videos. A lot of YouTube videos, when you're trying to learn about this, it's from people who already know the language, the lingo. They kind of are 5 or 6 steps along on this path, and I'm on this first step of the journey. But I do have the ability to consolidate learning and to express it in a way that I think will be understood by others. So I think this channel will be useful for a lot of people who are also trying to learn how to build wealth. Maybe the way that we can start off this channel is I can just share with you, where I am right now, and just within the last month, how I've moved around my funds and to have more of an advanced vision on where I'm going into the future. Now, a lot of what I'm going to say is probably stuff that ideally would have been done younger. I'm in my mid 40s right now, but for me, a lot of this is being learned now because I've just recently moved to the US after I grew up in the US, but I moved away just after college basically, and I've just moved back now in my mid 40s. So there's a lot of US oriented, US based kind of adulting that I have had to learn over these last 2.5 years since we've been back. Even simple things like getting used to a schedule of taking the garbage to the street each week. I had never done that before. I never had a mailbox in my adult life before. A lot of these things that people in the US would just think of it as normal things, I had to figure out. The insurance system in the US, how the retirement system works, how the stock market works. A lot of these things were brand new learnings for me when I moved back to the US. And in the last month or so, my biggest area of learning related to US life, related to adulting here in a more expensive Western country, has been related to the stock market and how to put my funds into places that are going to allow me to make money. So maybe I can start off, we'll get onto my computer here real quick, and I will just map out where I had money a month ago and where I've put it currently so that you can kind of get a sense of why I'm doing it. In future videos on this channel, I'll go into more details about why I'm doing certain things, what I've learned as I'm doing things, how I'm rearranging some of the places where my money is going, because as I learn things, I'm putting it into action, not quickly. I'm not trying to make any manic choices. I'm trying to make choices that are rooted in solid foundation, solid reasoning, not making emotional decisions. And so far it's been working. I've only been doing this for about a month so far, but I've been quite happy with the results. So let's get into this. Let's go to my computer.
All right, so let's take a look at this pie chart. This is as of summer. So this isn't as of the time I've kind of reorganized where I'm putting money. This is as of summer when I didn't really have on my mind what to do with some of our money. This is our family's combined accounts, my wife's and mine combined together. You can see here the biggest chunk is in checking or low yield savings. Now this is actually in several different accounts. Some of it's under my name, some of it's under my wife's name, some of it's under my wife's name in China, which is where we lived for 17 years. So this is spread out across multiple countries and multiple places, but generally that's the same type of account. It's either checking or a really super low yield savings account. I think some of the money in China my wife has put into CDs here and there, but it's been super low yield savings account or super low yield CDs in those instances as well, like maybe 1.5% type of things. So not too much. So that's a little bit more than half of the total money that we have. Now, I said before that we're poor. You look at this and it makes me think that actually we're not poor, but I could say that I feel like we've always lived very frugally. We're always very careful with our money. We don't own a house. So when you consider all that, that the amount of money we have is maybe enough to put a down payment on a house. But, it's not like we're swimming in dough or anything. We're living cheap. So let's look at this bar chart some more. So you can also see another 22.6% here is actually my parents' money. They gave us some money to hold on to because, I have a brother who is special needs. He requires full-time care. I support my parents with that at different times, but they wanted to have some of the money for taking care of Derek that we would hold just in case anything happened to them now that they're getting a little bit older. They wanted us to hold on to this money. I can't really do too much with this. I can put it into CDs or high yield savings accounts. I can't go investing it. This isn't my money to do with as I please. I can talk to my parents, and if they agree with something, then I can do something with it. And that's a nice safety net sitting in there for us to help take care of my brother. You can also see another 13.5% here is in a family boutique hotel. So my wife's family in China, we actually helped contribute to building a hotel in their village that is now operational. It took quite a while for it to be renovated. It was actually an operating hotel for a couple of decades already. Very small scale, kind of homestay style experience. But they wanted to spend some money and kind of fix it up, make it nicer. They've done that, and they've recently opened it. It's being managed by my sister-in-law and my brother-in-law, and things are going there. We're thinking of this as kind of a longer term return. Like, we've invested to become 15% owners in the family business, but a lot of the profits that are going to come for the first couple of years will just go towards paying off loans for that. The family was very lucky to get a lot of those loans for no interest loans from friends that basically were giving a loan in exchange for being able to stay at the hotel a certain number of times over the first like 10 years of operation or something like that. So it worked out really well. But the profits for the first few years of that will all go towards paying back those loans. And then once those have paid back, then we'll start to collect 15% of the profits on that. I have no clue what that means long term. There's also this $10,000 contribution to an organic orange farm that we made. This was a more temporary investment. This was also near my wife's village. There was some friends of ours who have this farm that they've been operating for quite a while, and they were in need of upgrades on some different infrastructure to really be able to do more. Not only do it's mostly oranges, but they also do olives and olive oil and a handful of other things, especially oranges though. And we contributed about $10,000. And this is a temporary, the way they did this, they took a certain amount of investors to help out with this renovation process they were going through. And then there was going to be over a 10-year period of time, we would get back based on how much they were able to profit after doing these renovations. It's been pretty good. We'll definitely make more than the amount we put in. And then we have two little pie slices here that are from my wife and I's retirement accounts. And again, these are actually really new because we've only been back in the US for 2.5 years. We didn't have any retirement accounts before that. We didn't even have it in our mindset to think about like a Roth IRA. I didn't know what that was 2 months ago, or a 403B or whatever. I've been living outside of the US, so these things are not in my they weren't in my consciousness up until more recently. So you can see here, like, there's a decent amount of money, but it's not being used in very good ways. I mean, some of it is. I think the family boutique hotel is contributing to a family business. Wonderful. But generally, this 51.9% here is just sitting here basically just losing value over time because of as inflation rises, and I'm not making anything basically. Low yield savings accounts bring in like 0.55%. So it's this. When I realized this, I was like, what am I doing? But I just didn't have the knowledge. I didn't have the background experience to know what to do with my money. I had never really had much in savings anyway. Our family has been living in a village and living very cheaply and having our own business, but not making that much money. So we didn't have that much savings, but it was fine because the cost of living was nothing. I mean, literally, we were living for the last number of years in China in a village that, we were paying $250 a month rent for a village courtyard home where we had 8 bedrooms and 8 bathrooms and like an outdoor indoor kitchen sort of thing. And we had some farming space and like a big outdoor courtyard area with a hammock, and it was very nice, and a bunch of fruit trees and nut trees growing on the property. It was wonderful. It was only $250 a month. So, we weren't making that much in our business that we had. We had an English training center that my wife and I had started. We weren't making that much, but we were making plenty for living there. But it wasn't like I wasn't thinking about things like the future that much. I was kind of just thinking like, let's build up this business, see what we can do. So this is where things were in the summer. Now let's take a look at a different chart, and let's look at where things are now that I've moved my money into various places and how I'm already seeing a lot of benefits from this shift. All right, so let's look at this updated pie chart. So this is quite a few more pie slices, as you can see here. I don't think I'm done. I've been moving things around. I'm not trying to do anything too quickly. I learned that lesson earlier when I was moving things from this to that spot and kind of like, move something from there and then didn't realize I already moved it from there and then tried to move something else and like overdrew one account. And I was like, I got to slow down a little bit. But this is a work in progress, but this is a significant advantage. We'll go into some of these different pie slices. Some of them are about the same. I mean, the parents' money for brother, that's still that same amount of money, still about the same percentage as it was before. That hasn't changed. You can probably see a very significant difference from the 51.3 or whatever that was in this checking before to the 6.8% black slice here is in checking. And then it's still this other part that's abroad. That's still, we haven't figured out what to do with that one yet. We are going to be going to China next summer, so we're going to go talk to the bank and see. We were thinking at different times of just bringing it back to the US. But I think there's actually some advantages to keeping it there just because of the condition of the world. It's nice to be diversified even internationally if you have the opportunity. And since my wife is Chinese, that gives us a bit of safety, a bit of a safety net over there. We're going to figure out if we just want to put that into some CDs or what we want to do with that. So that's probably going to stay over there. If the exchange rate gets significantly different, and at some point there's a reason to move that back into the US, would probably consider that. But for now, I think we're probably going to keep that there. There's other little slices in here. You can see this crypto slice and this appreciating asset slice are very small. Crypto, I've just been learning a bunch more. So this one might gradually grow a little bit bigger. I'm going to be very cautious with it. I am more bullish on it than I was before just because I've learned a lot more, and I will make some videos about that in the future because it's interesting. It's quite interesting. And appreciating assets is one where I bought like a quarter ounce piece of gold. I bought a 10-ounce piece of silver. I have some sports cards. I've been into sports cards for a long time. There's not a lot of sports cards that I would consider as appreciating assets, but there are a handful that I would consider that way. And so I've bought a few of those that I want to keep on hand, a Kareem Abdul-Jabbar autograph card, a few others that I think are just probably going to be appreciating assets over time. Not a whole lot. I'm not investing a whole lot. I don't think sports cards in general are an asset class. I think it's more of a hobby. But since I have a lot of knowledge in that area, I'm just keeping a handful of them for this kind of purpose. You can see the Family Boutique Hotel, the Organic Orange Farm. Those are still the same parts as before. And then there's this big chunk, a couple of big chunks down here at the bottom of the pie chart. The stock market is 13.5%. So I put 30K into the stock market, just individual index funds and stocks, specific stocks. And that's doing really well so far. I've only been in it for about a month so far, and my $30,000 has made me about $2,000 in profit so far. So that already is like, wow, that's pretty cool. The Kids 529 plan, so I've put 10K so far in. This is a college fund that is tax protected, so I've put that in there. It's only making a tiny bit of money compared to other things I have on the stock market. I don't have as much flexibility with what I can put in there, so it's kind of a low return. It's mostly bonds and treasury bonds, that sort of thing. And then the retirement account is 10.6%. So this has gone up quite a bit. I've kind of figured out my Roth IRA situation. I've maxed it out for this year. Soon, I think a bunch of that money that's in checking or actually a bunch of the money that's in the high yield savings account right here, 4.5. Most of that's in my wife's account, and we're going to eventually set her up before the end of the year with a Roth IRA and then max that out for this year. And then we'll start maxing those out each year after this, as long as we're doing okay financially. So this is kind of where things are at for now. I think this is much, much healthier. There's spaces in here where there's safety. There's spaces in here where there's room for growth. There's spaces in here that just diversify my money in healthy ways. So in the future videos, I'm going to start going into especially this slice about the stock market, the retirement accounts, especially into those chunks, because I think those are the ones that are going to be the ones I play around with the most. The retirement accounts, I'm probably not going to play around with too much. I'm just going to try to max out and have something safe. But the stock market is the one where I'm really playing around in, and so far having a lot of success. The crypto as well, I'm doing pretty well in that over there, but I'm going to be learning as I go. Gradually, those two slices of the pie might take over a little bit more. I'm very conscientious that I don't want to jump in super deep until I understand things better. I know that I'm stepping in at a time when everything's going up. I know that's, a risky moment to step in if you don't have the background knowledge. If you have the background knowledge and you know what to expect and you kind of know when to do things, I'm learning that. I'm learning that from a lot of different sources. So I'm kind of figuring out, but I didn't want to jump in too deeply until I felt like I had a good handle on some of those things. But I have a feeling the stock market piece of this pie and the crypto piece of this pie probably will be expanding gradually over time, and some of the other things might shrink down a little bit. That savings abroad one, that checking one. The checking one might always stay right around that, just because we do need a certain amount of money that we can just access really quickly and easily for purchases. Kids are just getting braces, for example. Both of them are getting braces at the same time. My gosh, that's so expensive. So we're going to have to access, checking and have some money for that. And so there's going to be some other things. But this is where things are at for now.